Okay, this is going to be episode number 171 with Murray Voth of RPM Training. And Murray, if you actually, I'm going to mute you and then read the intro, and then I'll unmute you, um, and then we'll get going. Are you ready to supercharge your auto repair business? This is Coach Chris Cotton from AutoFix-Auto Shop Coaching. The weekly Blitz is where industry expertise and business innovation collide, revving your engines for the week ahead. Every episode has game-changing insights, up-to-the-minute industry updates, and practical tips to shift your business into high gear. We're talking about stuff you didn't even know you didn't know, folks. If you haven't done so yet, please check out one of the other great podcasts on the Aftermarket Radio Network. Are you feeling exhausted by generic marketing strategies that just don't connect with your clientele? Look no further. I want to introduce you to Brian and Kim Walker and their staff from Shop Marketing Pros. They are truly the best in the business, or I wouldn't be telling you about them. They've walked in your shoes as former shop owners and know precisely what it takes to make your business stand out. Their tailored marketing solutions are designed to elevate your brand and draw in new customers. Partnering up with Shop Marketing Pros and hang on. Partner up with Shop Marketing Pros and let's kickstart your business growth together. Discover how they can supercharge your success. Man, Chris. Partner up with Shop Marketing Pros and let's kickstart your business growth together. Discover how they can supercharge your success at shopmarketingpros.com/Chris. Hey, everybody. Hey, everybody. I wanted to invite Murray Voth from RPM Training in the booth today. He's got a great topic that I want to continue gaining traction on, and we're going to talk about it here in just a minute. But how are you doing today, Murray?
I'm doing really well, Chris. It's really good to be here. Thanks for having me on.
Thanks for suffering through me reading all that intro, because I was butchering the crap out of that this morning. That was absolutely insane.
Well, thank goodness for Tracy, right?
Yeah. Tracy Carm, whoever's editing that, and then they'll probably edit all this out, but they're fine. You guys can leave this in if you want to. So the reason why I brought you in today is you have a great wording for a change to the word labor rate. And I've heard you, I don't know how long have you been using this wording?
Probably 5 to 6 years. I've been using the word service rate. Yeah.
Okay. So I first heard you use it probably 2 years ago. And so I've started using it.
Nice.
Sometimes I'm good, sometimes I'm bad, but we're trying, right? Like we're trying to get better. So can you talk to us a little bit more, talk to the listeners about service rate versus labor rate, how that came to be, et cetera?
Sure. Well, to give credit to the person who taught it to me is a fellow by the name of Mark. He owns Dynaco Automotive in Edmonton, British Columbia. And words are very important to all of us, but he is very particular about wording and how it sounds. And he just felt like labor was this really negative, heavy thing, right? Labor, we have to charge you labor to do the job, right? And so he ran across a situation where he was dealing with, I think, a professional, like an engineer or something like that, and he got a bill for services rendered. He's like, this is cool. Service is positive. I'm offering service. I'm here to serve you. And at the end of it, yes, you're going to pay me, but it was a much more positive outcome, right? So if you think of, and it's more than just a change of a word, it's a change of approach. So for example, if I hire a CPA, an accountant, I'm going to assume, until otherwise indicated, that they advocate for me. They're on my side. They're looking after my position, my tax position, and the rest of it. Even though I pay the accountant for their services, they are my advisor. I can hire a lawyer who maybe I'm going through a real estate deal, or maybe I have an HR challenge or something like that, where I hire a lawyer to get me through that. And I still pay them for their services, but they advocate for me. We in this industry have developed this antagonistic model where it's kind of this us against them, right? Car owners, the driving public are showing up at shops, very defensive, very protective, maybe even angry because they've had a bad experience somewhere else. And now it's this confrontation about how much can the shop take from them and how little can I give to the shop, as opposed to, hey, Chris, so glad to see you here. We would love to serve you today. How can we help you with your vehicle, right? Completely change of approach. We're going to advocate for you on how to manage your transportation and how to look after your vehicle the best way. Yes, there is going to be fees involved. You are going to be paying for us to do that, but the intent is that we're going to be looking after you. So it just changes it to a much more positive outcome. People appreciate paying for service much more than they like paying for labor. It's just has gotten into my language now.
And so if somebody calls up one of your shops that you work with or coach and says, "What's your labor rate?" Like, what are you coaching them to say? How are you?
Well, first things first, I say, I remind my clients that it's pretty rare that good shops get a phone about their labor rate. It's a thing that there are consumers that use it because they think it's a way of comparing apples to apples, right? Which is really not the case. Two things, and I will answer your question, Chris, but I want to give some context to how I would teach that. All right. So consumers are phoning around, what is your labor rate? Or they're calling for how much is an oil change? As apparently that might be some guide to a pricing situation. Now, think about this. How many of us phone a lawyer and say, how much is your rate? Or to an accountant, how much is your rate? We generally say, can you help me? They say yes. What's your challenge? They say yes. And then they tell us what their rate is after we've agreed to their services, right? So professionals, those kind of professionals, don't talk about their rate over the phone. So I tell people, see if we can, we want to be transparent, but we also don't want to fall into the game of giving rates over the phone because there's no comparison of apples to apples. Right? So then generally I encourage my clients to use the word service instead of labor. So our service rate or our facility service rate, which is another term that we haven't really touched on yet, which is now it's expanded from service rate to facility service rate, is how I encourage them to answer it. And I tell them that our facility service rate has various levels depending on the type of service you're receiving. I want to let you know that it includes our courtesy vehicles, it includes our shuttle pickup and delivery, and it includes washing and vacuuming your car. So there's no extra charges for all of those other services.
Nice.
How can I help you today, sir? Right? So what you've done is you've given something for that person to compare to, where if they found a couple of other shops and asked them what the person said, either didn't answer the question or said, well, it's 98 an hour, it's 125 an hour. The person says, thank you very much. And the advisor didn't even ask them, how can I help you? As opposed to the way I ended my role play, which was like, hey, Chris, how can I help you? Why did you call today? Right?
Yeah. I love the term you said, what's your challenge?
Yeah.
Like that's pretty simple. Like, what are you trying to do? I've heard from somebody else, I forget who right now in the industry, but they're like, we don't sell labor, we sell fixed cars. And
I
so
like that.
so when you don't focus on the labor and you focus on the fact that you're fixing cars and the customer's problem is going to be solved when they leave, what's better than that?
Yeah.
Like not a whole lot. Yeah.
Exactly. Again, most people are calling a shop without knowing what questions to ask.
Right.
And if we ask them questions that they know the answer to, we can get them away from that specific dollar amount that they're hung up on. And again, folks, we all need to know what we're spending. I always say that we should be giving estimates before we start, but that's once the car is actually there, right? I don't have an issue with that. It's just that we want to help people understand why we were a different shop or a better shop to come to, even though our rate might be $25 an hour more than maybe a couple of other ones that they called. At a certain point, it's not going to make any difference, right? To the client. Yeah.
Well, and really, like when we talk about service rates and increasing our service rate, a lot of times we get kickback from shop owners, oh my gosh, $6 an hour, $8 an hour, $10 an hour on a 5-hour ticket, that's $50. Right. And if you're already not charging correctly or whatever, then it's not going to make that big a difference. Yes. But it can make a world of difference to your shop. So something, a word you used earlier, I want to touch on and push into that a little bit more, is you said something about mindset. And can you talk about like the shop owner's mindset and any issues or whatever? I'll just let you take it from there.
This is an awesome question, Chris. So mindset, when you think of the term mindset, there's multiple ways of looking at it. So in other words, You could look at it from a psychological standpoint. As an athlete preparing for an Olympic event, they talk about mindset, like where is that athlete's mind. Um, then you can take a look at somebody and look at their mindset, and it comes from their culture or from their family of origin, right? So a mindset that comes from where you come from, right? Somebody who comes from Canada is going to have a slightly different mindset than somebody who comes from the United States. Somebody who comes from Arkansas is going to have a little bit of a different mindset than somebody from Colorado, right? We know some of these differences, and I want to highlight positive things and not get off the weeds into negative stuff, right? And then another kind of mindset is how you perceive yourself and what you do and what value you bring to the world or to let's say your customers, right?
Right.
And the biggest challenge, Chris, you and I face, I'm sure of it based on our past conversations, is we have people who have become automotive service technicians, or to use Carm's right, they become mechanical specialists or technical specialists, and their identity is tied up completely in that role. So in other words, I repair cars, I get paid to repair cars. I'm really good at testing and identifying, technological challenges on cars. I get paid for that. And so their identity is wrapped up in that. They don't see themselves as a business owner. I'm in current conversation with somebody, I'm not free to disclose who it is, who does not come from our industry, who is looking at buying some auto repair shops. I've just listened to a couple podcasts of some outside people that have bought automotive repair shops. Now, I'm not talking about private equity. That's happening a lot in
Right.
parts of the United States. We're talking about a couple of people with business backgrounds, finance backgrounds, who went out and analyzed what is a good business that creates good gross profit that people aren't getting the most value out of as the owner of that business. And guess what their research indicated? Automotive shops. They are
Right.
now on the podcast I listened to, they're now on their fifth shop because they've recognized that's a duplicatable model of creating gross profit dollars, which then you pay your expenses with, which then creates net and creates the value of the company. So think about that. And that's not the first people I've listened to. I have some clients that have owned a farm, they've owned a real estate firm, they've owned a deli, and now they own an automotive shop. And they chose the shop based on the kind of gross profit, location, and can their family, because their family's a bit older now, can their kids work in the business, right? So
Right.
think about their identity. Their mindset is, I have bought a machine, a device, a company that creates gross profit. I will now learn the moving pieces of it and put the pieces in place and the people in place, or maybe keep the people in place that are there to keep the whole thing running and just make it a little bit better once I understand the moving pieces. Their identity is not tied up in repairing cars, right? And that I find is one of the biggest shifts a technician slash turned owner can make, is turning into a business mindset and looking at their business from a standpoint of net profit, working backwards to gross profit, working backwards to whatever else you got to work. And that's how I coach people to that.
I think that's great. And that's the issue, right? And most shop owners that are not profitable, instead of saying I bought this business to create a profit to better my family, they I think their initial statement or the initial thinking is, well, I'm working in a shop and I can do it better. But they don't know what I can do it better means, right? Like maybe they can fix cars better, but they can't run the business better because they don't know the foundation of it.
Yeah.
And for us too, for AutoFix, we've been reached out to. Gosh, I just looked at the calendar. Like here we are, we're almost halfway through
Oh my
2024,
goodness. I know.
and I'm thinking back to COVID, which is 4 years gone now at this point, kind of,
Right.
depending on when you start and stop that. But, we've had more people than ever reach out to us and say, "Hey, because I was in this industry and I experienced this, I want to get into the auto repair." And even to take your thought one step further, a lot of these investors want the real estate that the auto repair sits on, because and so what they're doing, or what we're seeing them do, is they buy failing shops or
Yes.
shops that don't have the right mindset, and they hire a consultant because they know they know that they don't know anything about the business, and they're not so prideful that they're not going to reach out to somebody that can teach them or make them better. And then they turn the business around, they sell the business, but they still own the land. And so they bought a business and basically flipped it like a bad house and made money off of that. And now they have the real estate that's sitting on top of it. And they know, for the most part, that as long as those businesses are operating well, they'll always be able to pay rent. So it's very interesting thought. And so I haven't thought about it this way, but really, as a shop owner, you have to think about your business as a business and a machine, and how it creates business and wealth and opportunity for your family. And if you're out there going like, "Oh, I hate you, Chris, because you said all that," well, I'm sorry, but you need to grow up and put your big owner pants on, because that's what business is all about. And so I'm right before you hopped on here and we started recording this, Murray. And I don't know if this is going to come out before or after this podcast. So if you're, I'm talking about it now, and if you haven't heard it, then look for it. But I'm working on an article or a podcast called "Are You Interested or Are You Just," or excuse me, "Are You Committed or Are You Just Interested?" Because what I find is a lot of people call me and they're interested in coaching, but they're not committed. And those people fall by the wayside. And, 2 years later, you may hear from somebody and be like, "Oh, I wished I was committed 2 years ago." And, think of all the places we'd be now. But anyway, that all goes back to mindset. Like, are you committed, or are you just merely interested?
Yeah.
And go ahead.
To tag on that, Chris, is another view of mindset, I guess, because words can be used and then we can assume that people understand our meaning, right?
Right.
But another one is that I work with people is, can I get them to see it from a different point of view? Can they have a paradigm shift? Is there a way, an analogy that I can use that catches their imagination, that they can see it? So you mentioned about, a house, and you sort of went right into these companies that are what they're doing, which is the podcast that I listened to yesterday. But if you think about it, how many technicians turned shop owners are familiar with the term fixer-upper, right, for a house? There's TV shows about fixer-uppers.
Right.
People go and they buy a rundown house and they fix it up and they sell it and they make money. And that's logical. It makes sense. And people will maybe even comment about, well, what were the former owners thinking? Why didn't they keep it up today? And then another common thing that automotive shop owners do is they buy used cars, or they buy cars off their clients and they fix them up and sell them.
Right.
Now, you just said the word in a slightly different ways, is 90% of automotive facilities, independent facilities in North America, are fixer-uppers.
Right.
So for those people listening that have not signed up for coaching and training of this type from anybody in the marketplace, you're running a fixer-upper shop. And all of a sudden, I'm hoping that analogy resonates with you, because you're thinking to yourself, what do you mean I'm a fixer-upper? I'm doing the best that I can, right? And you think to yourself, well, you're obviously missing some information, because there are people who will walk in there and they'll make all kinds of changes. And next thing you know, they'll be able to sell it again for more than what they bought it for, because they made those changes. So the question a shop owner needs to do, number one, is let go of their ego. And the second thing is what would somebody else see in my business that I'm not seeing?
Right.
What is it that I'm missing, right, in terms of that opportunity to buy my. So the idea would be that I challenge my clients with is, would you buy your shop today? Or would you buy your shop a year ago? Would you buy your shop 2 years from now, right? And some of them are like, not a chance. And I'm like, why not? And they'll list off all the things why they wouldn't buy the shop. So then why do you still own it?
Right. Yeah. And why? And if I'd asked you that question 3 years ago, would you have told me the exact same 7 things? And what's the difference between then and now? Yeah. That's really interesting.
Now, not to get not to beat up on people and get too negative here, is we all bring our emotional and psychological baggage, along, with whatever we do in our lives, right? So a couple of things I want to comment on that I've run across recently. One was a book called The Psychology of Money. Not great. So I don't remember the author, but I picked up a few tidbits. and it's about investing in stocks and bonds and all that kind of stuff like that. I thought it was going to be more of a truly academic psychological study, and it wasn't. It was an investor talking about how he did it at the end of the day.
Okay.
But at the end of the day, he says money always has a cost, right? So if you're investing in the stock market, the greater the risk, the greater the reward. Are you willing to take that cost of the stress of losing some of your capital or losing all of your capital, right? There's a cost to it, right? So the idea is when it comes to what we do, Chris, is people are interested because they hear and see the results of what some of our clients have accomplished. But at the end of the day, they're not willing to pay the cost psychologically to actually make the changes to make that money happen, right? Very few people in the world, and in fact, there's no such thing as a self-made millionaire. When you drill down into every single extremely wealthy person, they got a lift from somebody, right? There's no such thing as a self-made person. I don't care how much people use that language. Somebody gave you a hand, a lift, an idea, a concept, gave you some capital. Something happened that you were given that you've now taken and leveraged. And congratulations. I'm not objecting to the fact that people have done well, but it's this idea of so talked about, Chris, receiving messages from people, I hate you because of what you just said. Well, I've been receiving some text messages recently. I hate you. And why? I have a tax problem. I have to create a holding company to get the cash out of my company. I love those texts, Chris.
Yeah.
Right? Like what a good problem to have, because
yeah.
So yeah.
Well, and that's why we're all for paying, the tax you owe and everything else. Like you have so much money set aside to pay the taxes and you're done. And then the extra you get to keep, when we go through the profit first stuff and then the cash flow and move that through the business. It honestly, it makes me sad to think about shop owners out there who are struggling, because there's no need to struggle. Like, especially since COVID, with all the help that the industry's gotten. I'm still, every week somebody says, oh gosh, I still haven't recovered from COVID, or, this last 2 years have been terrible. Like, I don't even know. Gosh, I just see the numbers that our clients do, and how it's kind of weird. Like, even 5 years ago, we didn't have many shops that were over $2 million in sales. And now, actually, to put a percentage on it, don't quote me to this, but I would say probably, if I think back 5 years to our clients, probably less than 5% of our clients did $2 million a year or more. And now I would say that number is probably close to 25 to 30% of our clients are doing $2 million a year or more. And again, that's a mindset change. That's a shift in this, a shift in that. But it's the world we live in too now. Like, people have to get their cars fixed. We're there, we're fixing them. But go ahead.
Well, what I was going to say, the other part, another way of looking at mindset is, and I'm going to come at this from a different angle, is what kind of client are you attracting? If you are a blue collar mindset, right? You're an automotive technician, blue collar, you're going to attract blue collar customers, unless you understand that there's a different type of client out there looking for your services, right? So then if you think of a lot of blue collar people, right? People who are plumbers and electricians, and I'm saying this in a positive light, these are very talented, skilled people.
Right.
They will do most of their own work on their cars because they can. And then they only bring their car to a shop when they're stuck, which now, as a shop owner, you're now getting challenging cars all day. You're not getting any gravy because all you have is hard stuff, right?
Right.
That's one mindset. Another mindset, Chris, and I ran it across again recently, and because I'm not this kind of person, I don't recognize it. It takes me a long time to recognize it, but it's what I call pathologically frugal shop owners. They're cheap.
Okay. Pathologically frugal. Okay. I like
the
it.
Politically correct way of saying cheap, right?
Okay.
There's in the prairies of Canada, there's an expression that somebody's tight as bark on a tree.
Okay. Yeah, I get it.
Right.
Yeah.
So I've realized that because that's your mindset, that's how you live your life. So you're cheap, you're frugal, you don't upgrade your equipment, you pay as little as possible to your people, you spend as little as possible on marketing, And not just do those things hold you back because you're not expanding your marketplace, you're not updating your equipment, and you're not keeping good people. You also, as a cheap person, attract cheap people.
Right.
And I'm watching a shop now, actually two scenarios, where one person has bought out a family member and taken it over. So the cheap person is retired. They did well enough, right? They have a home paid for and they're going to retire, and right. But this person who has bought it has had a record month ever since they've bought it.
Nice. Good for them.
And it's not even stopping, not even close, because the mindset was completely different, right?
All of that's great. The thing that gets me is that usually what we see is people that have this frugal mindset. You would think that they would just be sitting on stacks of cash and be raking it in because they're not spending any money, but they're also not optimizing. There's no drive to charge correctly for labor rate, compensate people correctly. And so none of that's in there, I guess. So it's just there. You would think somebody that doesn't spend anything would be sitting on tons of cash, but they just don't.
Well, the thing is the other reason they don't is they restrict their income so that they don't pay taxes, because they have this hate on paying taxes. And so they get stuck in this very narrow financial window of a very tight existence, right? And there's that growing that value piece. Sorry, go ahead.
I was going to say, that's a whole nother episode. We could talk about Canada's taxation and America's taxation and how we feel on that. But, I'm all for paying what I owe. I would just like to see better use of what I owe when I pay.
Sure.
But anyway,
and again, we that's not my expertise either, but I was speaking with somebody today about this, and it's like we still live in democracies, and we need to be more activist with our representation, regardless of we are on the political spectrum. We have that right to do. What happens is we ignore it and then we complain anyways. So I tend to tell people, what have you done about it? Anyways, but here's another piece that I see as an issue in our North American society. We are both free market economies, right? We're both capitalist systems. I would say, Canada's probably a little bit closer to center than you guys are, but whatever, right? But here's the thing. How many small business owners, including shop owners, think that profit is a dirty word?
Right. Most all of them. Yeah.
Most all of them.
It's insane. Yeah.
So I'm thinking to myself, how is this possible that in two countries with a free market economy where profit is deemed as a good thing, is if you use any other language, you get accused of being, something that you don't want to be, right? Yet they have that fear. And I've given a lot of thought to this, Chris, a lot of thought, because I always think there's a reason why people behave the way they do. So we got to dig into it. So when you think about it, there have been some big abuses of corporations with profit.
Right.
So then if we go, we go in I listened to an episode. Oh, jeepers. Why is the author's name escaping me now? One of my favorite writers, writes on all kinds of time. He's the guy that wrote Moneyball. Michael Lewis.
Okay. Yeah.
Yeah. Fantastic book, by the way, for if you haven't read it yet. To me, Moneyball is a business management book. How the Oakland A's ran that team. Right. Mm-hmm. But Michael Lewis has a podcast now that I've just been introduced to. And couple of his episodes are on the private companies that run the student loan program in the United States.
Oh, I would like to hear that, but keep going.
Anyway, so there's all kinds of corporate abuses. If you help people pay off their student loans, you lose them as a client and you lose money as a company. So you don't have any interest in helping students pay off their student loan, right? You continue to drag it out, right? In Canada, we have I'm going to go more back historically with the great fishery. I mean, Newfoundland, right? Cod fishery, fishing for 400 or 500 years. Well, back in the day, as somebody who was a fisherman, you got told what you got paid for your dried fish. You would dry salt it and dry it, hang it out on racks, and then the guy would come and buy your fish from you, and you would pay whatever they dictated because they were in control of the market. And then you, as a fisherman, had an account at the company store, right?
Right.
For nets and boats and repairs and that kind of stuff like that. Hudson's Bay, very famous company, right? 500-600-year-old company account. Hudson's Bay did all the fur trading. Same thing. You were a trapper and you supplied the furs. They paid you whatever the going rate was, and then you had an account there. Did you know that most fishermen and most trappers owed $1.25 for every dollar of income they took in.
It wouldn't surprise me. Like I'm not going to say it's a great model, but whoever came up with it was like, hey, we're gonna make money on both sides of this, right? And
Right. So think about that as
yeah.
so when a large corporation makes money, a lot of us think they make money off of our backs.
Right.
When a person opens a small business, they have that mindset that they're now going to be viewed as corporate by their customers.
Right.
As opposed to, guess what? I can actually be completely honest, transparent, and profitable and give value and be proud of the profitability that I have. If that all makes sense, right?
Absolutely. It does. Yeah.
Yeah.
And we're not talking like, okay, this might be a big number for some people, but I'm big on, like, I want to try to push 25% net or better. So you have $1 million company and you're trying to make $250,000 for your family, for yourselves, for whatever, and you have to go through the headaches of owning the business and all of that
Yes.
that entails. $250,000 on a year's worth of work is not a lot of money when you look at Elon Musk or somebody running a corporation and making $100 million on a business, something like that. So
yeah.
Yeah.
So here's another way that I get some of my clients past that emotional bank account. All right. We usually in a group context, so that we can have a little bit of fun with this. And I've been able to get a number of really hardcore objectors over this, including some employees of some companies that were objecting to profitability. And I said, let's all pretend that we won a lottery, right? Whatever what the Super Bowl or I forget what it's called. When we were in Nashville, I saw signs at convenience stores.
Powerball, Mega Millions, all that.
Mega Millions, right? Like in Canada, we have 649. We have big lotteries too, right? So then I say to the group, okay, so let's say there's 12 of us in the group, and we all won 12 million, and we each have $1 million. What would each of you do? And I said, let's have a little fun with this, but let's be serious as well, right? And so most people, when they think about it, say, I'd pay off all my debt. I'd pay off my house. I'd pay off my debt. Some people say, you know what, after I paid off my debt, I'd probably treat myself to a trip to Europe, or might buy a new snowmobile or something. And then I say, okay, so let's say, for example, there's $500,000 left over. What would you do with it? Well, I would invest it. Okay. So now, based on your current knowledge of what you hear in the marketplace, investing the money, what kind of an investment could you expect to get in a relatively safe and conservative portfolio? And people are like 7%. Would be a kind of a number I could get. Okay, so you're going to meet with a financial planner, and you're going to talk about getting a 7% return. So you're expecting that you're going to get about $35,000 on your $500,000 at the end of the year for doing nothing. Yeah, I would expect that. And most consumers, everybody would say, yeah, well, that's how it works. I have to get my investment. I have to get my return on my investment. So Then I ask them, and I say to them, where does the 7% come from?
Right.
Where does the 35% come from? You know how few people can actually answer that question?
Probably very few of them, yeah.
Very few, including business owners. And I have to walk them through. I says, that comes from profit. The only way that your stock value went up is because that company made a bigger profit. They sold more widgets, or they charged more for their widgets, or whatever. So, and all of a sudden, light bulbs begin to go on to people is, ooh, I have a business that probably cost me $500,000 to $1 million by the time I add everything up to where I've spent to be in here.
Right.
I'm not getting a 7% return on it. In fact, the number for Canada, and I've heard that it's not far off for the United States, specialists that analyze this kind of stuff have said the independent aftermarket should be getting a 17% return on its investment, a 17%. And that has to do with what you said before, Chris. Additional risk. You're working on moving vehicles. You're working with hydrocarbons. You're working with safety issues, right? You're working with supply chain issues. You're working with HR issues. And so the risk factor of an independent auto repair is a 17% net. So when you think about a 20 to 25% net of sales, you also have to think about it from a return of investment on my equity that I put into this company. And that begins to get some light bulbs going for people when they begin to realize that, hey, I've actually got something to invest in, right?
And I love all of that. I think that's great, and I think that's a great exercise that you're talking about. I thought you were going to go a slightly different way with it, but my, you know, well, let me back up just a second. Probably 60% of the shops that engage us and move forward net less than 5%. And again, makes me sad. But it's just there's a lot of upside there, and we can get them, from 5 to 25 to 30. I think the most we've got like I'm going to say a small shop that does between $1 million and $2 million a year. They're netting like 43%, because they have like stuff dialed in. But anyway, so most of the shops that come into our program are 5% or less. And I don't have this number top of mind, but we see a lot that are negative, which is just crazy. Like they've got a business they've been running for 4 or 5 years and it's been negative the whole time. Yeah. But I thought what you were going to say is if you're going to invest $500,000 or $1 million and expect 7%, then why are you investing $500,000 or $1 million and settling for less than 7%?
Exactly.
And again, it goes back to mindset, where shop owners don't feel or don't think of themselves as business owners, and they're okay being mediocre or less than mediocre. Let's face it.
Well, and I'm glad you elaborated on what you thought I was going to say, because that is, I think I was implying that to a degree. But here's another reason why shop owners don't see themselves that way, is because they don't see the 500,000 that their business is worth now as a lump sum, because it all came in little drips and drops. So 5 years ago, when they opened it up, they probably opened it up on a personal credit card.
Right.
Which they then paid that off, and then they put another 10 grand in, another 30 grand in, and over the course of 5 years, they've put in about $100,000 a year of capital into the business. But because they don't see it coming out of one big account, like a $500,000 chunk, they don't see the value that has accumulated in all that little bit of stuff that they put in. So again, if they were to go back again, and here, oh my goodness, Chris, here's another problem. The challenge is our accountants, for goodness sakes.
Right.
Is if you had a good accountant that was walking you through your balance sheet and walking you through stuff and showing you your debt to equity ratios and showing how this company is growing or not growing, right? It's a whole nother perspective, is looking at a balance sheet to become a business owner, never mind your income statement. And when you start looking at a balance sheet, that's when you begin to understand how the value of your business is growing. But guess what most shop owners do? Never mind being cheap. Oh, I can't afford a CPA, so I'm just going to have my cousin do my books.
Well, right? Or they just don't create anything at all, and they don't pay the tax man, and then they go to sell. Then they go to sell, and they're like, "Oh, I'm going to sell this business," and it's like, wink, wink, but we take all this cash, and you can't track it, you can't record it, and then you can't sell your business. I've had people contact me in the last, couple years and say, "Hey, I need to sell my business. Can you help me evaluate it, or can you help me for a couple of months to kind of pump it up?" I'm like, "Well, first, a couple of months is not going to really show any long-term track record. Like, if you're ready to sell your business, if you wanted to sell your business today, you should have started like 3 to 5 years ago preparing for that."
Yes.
I also think, and so we get a lot of people that just don't have an income statement, for whatever reason, or they're 5 months out, like it's June, July now, and they got one at the end of the year and pay their taxes on it, but they haven't seen one from the first quarter or like January, and it's too late to make changes in your business if you don't see an income statement. And the other thing I'll say is I think a lot of shop owners look at their income statement and it's like Monopoly money, like it's figures on a page, but it doesn't really mean anything. And then to go back to the accountants a little bit, most accountants are just there to do your taxes and protect themselves, and there's no real teaching. And if you on paper or your income statement says, "Hey, you made $250,000,000," then it's up to you to know where that is. Is it in a bank? Is it somewhere else? Because your accountant's not going to teach you any of that, because they just don't care. That's not what they've engaged you for.
Yeah. So that whole piece, and I, as people come to us and we work with them, we always tell people everybody can work at their own pace, but you have to have a pace. So, I've been lucky that everybody I've attracted so far has had rudimentary income statements and that kind of stuff like that. The more common things that they're behind and or their accountant is behind. And so we spend the first few months getting all of that caught up, including changing accountants, changing bookkeepers.
Right.
Those are the action plans that we work on to get things changed. Because if I don't see traction on that, I will let the client go, even though it breaks my heart, because at a certain point, I can't help you unless I actually have real numbers. And you can ask me a
Right.
million questions about, I got this technician that brought this, brought his duck to work, and it's his pet, his pet duck. And what do I do with my technician and his duck? I don't want to know about any of that stuff until I see numbers, because the numbers will tell me what we can actually do with your company and decide whether we can get rid of that technician or I'll give him 2 ducks. Like, I don't care how deep the HR problem is. I got to know where you are financially, where this business is, and then we can fix the rest of it. Right. Like,
Right.
So it's that whole idea, folks. And it can be intimidating. It can be frightening. You feel like that people are looking over your shoulders when you're doing your books and stuff like that. But we have to find ways to get past those feelings, because when you're past those feelings on the other side, the relief of knowing that you're all caught up with your vendors, you're all caught up with your taxes, you're all caught up with your employees, and now your business is growing is just so invigorating. And then that's when I start seeing the shops go from the million to 2, is when they've got all that, pardon me, all their ducks in a row.
Right. Yeah. Well, and so that's the other thing about accounts, whatever. And this can be any vendor that you have. I don't know why shop owners are so nice when it comes to this, or so laissez-faire, whatever you want to call it. Like, if their accountant's not getting their numbers back or whatever, then they're just like, oh, okay. I mean, shop owners, you have to remember that these people work for you.
Yes.
They're your
Yes.
vendors. And if you want something done a certain way, demand that it gets done a certain way, or go find somebody else. It's absolutely crazy. But anyway, so I want to talk a little bit, Murray, about what you do and how people can reach out to you and find you. Cause I mean, we're in the same industry, and the industry's big enough to support all of us.
Oh, yeah.
But so for us, for AutoFix, we're more relationship based, one-on-one, weekly coaching, but you focus more on like the group setting and your online stuff. And so talk a little bit about that.
Sure. We've got 2 training products. One is my SMART course, which is like a boot camp of automotive shop management and service advisor training. I have another business course, which takes you all the way from what is the purpose of a business to your balance sheet to your income statement. And it's kind of like accounting for automotive shop owners, making it palatable, making it so you can understand it, right? Making you comfortable with it. So those are courses that we have. And then we have what we call our mastermind groups, which are groups of 10 shop owners that get together. We have a composite, a business results analysis tool composite, which everybody puts their numbers into so that we're comparing apples to apples. So we compare to best practices, compare to peers. They can ask each other questions. And then within that, we have a monthly meeting with the composite, with the group. And then each group member gets an hour of private time with a coach in that same month as well. In addition to that, we've added a couple of 2 or 3 other things. We now have we have an all group meetup, which anybody in our network can join, and they just bring a topic. And so we'll range from anything that you want to bring to the thing. We don't get into the technical thing, like a piece of equipment, maybe we'll talk about a bit, but car problems, we don't. We now have a great guy by the name of Doug Brackett. He's a digital paperless expert. He now coaches digital. We have a special session with him. And then I have special guests. So we have HR people, we have marketing people. In fact, I've got Donnie Safer from NASTF coming in July to my group.
Oh, nice.
So looking forward to that. So yeah, so that's our service offering. rpmtraining.net's the website, Murray Voth at rpmtraining.net. And like you say, Chris, this industry is huge. There's so much room for both of us. And I really appreciate being a guest on your show. And I know that you and I do try to support each other and how we help our clients, right? And I feel like you're a good friend in our mutual attempt at helping this industry.
Thank you. And this has been fun. I think maybe we need to create another show. I don't know how we do that or put it out, and then just be like Mondays with Murray and Chris or something like that. And we can just get on and read topics out of a hat or whatever.
Yeah,
and to go from there. But
sure.
thank you so much for taking time out of your busy day. I really appreciate it. And I love where this episode started and I
Yeah.
love where it went. So thank you so much,
Awesome.
Barry.
Thanks, Chris.
Awesome. Thank you. Okay, so I'm going to mute you real quick and we're still rolling and then read the outro and then we'll be done. Thanks to all of our incredible listeners. Your passion and drive motivate us to deliver top notch content. A big shout out to our sponsor, Shop Marketing Pros. If your shop is the best in town, but your marketing isn't cutting it, it's time for a change. Shop Marketing Pros understands your business and ensures your shop stands out. Where quality meets visibility, Shop Marketing Pros ensures your auto repair shop stands out in a crowded market. Thanks for tuning into the Weekly Blitz. Remember, it's time to rise, grind, and keep your mindset positive, everybody. Until next time, this is Coach Chris Cotton signing off. Have a great day, everybody.